What's good, YouTube? I've been trading for 10 years and I can confidently say I found my edge in trading after I think the third year. Now, was it necessary? Definitely not. If I learned the right things from the start, I'd probably say it would have taken me about 6 months or 8 months to find my edge. But that's the beauty of it, right? I found my edge through my mistakes. I found my edge by looking at my losses. I would go through a losing streak and then see, okay, MC, you're doing this particular thing wrong. I would switch it up and then I'll make some money again. Then I'll see, okay, I'm doing this wrong, and then I'll switch it up. So as I'm elevating through my trading progress, I can see what mistakes I'm making, what I need to improve on. So who knows, man? Who knows how long it would have taken me. I don't really care. I love the journey because it's not satisfactory if you immediately receive something. I mean, it's in life like that as well. If you just receive something without working for it, you wouldn't enjoy it that much, or you wouldn't place a lot of value on it because you got it easy. So 10 years, man, been training profitable for 7 years now, and just getting better and better every year, just upping my lot size. I think I'm at my max lots that I can use right now. So now I'm just aiming at looking at higher quality trade setups and then just aiming to improve my risk to reward ratio. I think that's about it where I'm at in my journey. So I'd love to share with you guys what has helped me define my edge, what has helped me identify my trading purpose, what is important for me, because I trade a lot of strategies, man. The craziest strategy I've ever traded was looking at the stars aligning, and then you trade Euro USD, GBP USD, you get like a circular chart with all of the stars aligning, and then you'll study the astronomy, and then you'll take, it has to align at a certain gradient, and then at that gradient you need to wait for a specific time, and then you take trades. Man, I've traded news. I tried to buy impulses on the news. I tried to trade the reaction on the news. I tried to trade SMC. I tried to trade futures. I trade a lot of different things, and the beauty of it is I'm so glad I did, because then I finally found what's working for me and also working for hundreds of you around the world. So I'm stoked to get this movement started, because this is going to help generations. This is really going to help your kids' kids if you're doing it right. My goal here is to change lives, man. I told you guys I'm only getting started. I'm not going to stop here. And that's not arrogance, that's confidence, because I know it works. Okay, I know my strategy works. I've been putting it to the test. I've been challenging myself. It just constantly delivers. And that's the beauty of it, folks. The minute you find it, the minute you find what's working for you, you block out all the noise. Like, if somebody wants to show me a new strategy of a way to trade, I'm not being disrespectful, but respectfully, I do not care. I found what's working for me. I don't want to indulge myself in any other ways of trading. If I've talked to somebody and they found a way of trading, whether it's cap or not, I don't know. But if they honestly found something that works for them, I'm super happy for them. But I'm going to stick to what's working for me. It's helping thousands of you right now. I'm honestly honored to share with you more and more of this so we can all get better and better. So today, I'm going to talk about finding your edge and also the importance. Yesterday we talked about irrelevance. Today we're going to talk about importance. And just for peace of mind, with the following videos, we're going to do case studies. We're going to break down the charts from top to bottom. We're going to look at some entries. We're going to look at some results, my losses, my wins. I love to share my losses a little bit more than my wins because I feel people can learn from them. But yeah, that's what's coming in the following days as we slide into the conclusion of this bootcamp, man. But for the purpose of this video today, as I mentioned, I traded a lot of different strategies. So I had the honor of finding what works for me and what doesn't work for me. So I took it to the simplest approach, and I don't even need a chart right now to explain it to you. I'm just going to explain it on camera. I look at from top down analysis, okay? But that's not it. Just stick with me. I'm going to share the source right now. I look at higher time frame levels, previous week, previous day, previous session. I look at that. That's super easy. Anybody can do that, okay? Then I look at the reaction or from these levels. After that, I look at confidence. I already said I look at 9 things. But what's important is gaining a bias over that. We already discussed, I look at my 3 daily setups, okay? But if that's not there, which it's going to happen, then I have to look for something else, because we want to make money, right? I'm not going to always sit and wait around for a daily level. Now, don't confuse this with being patient for your setup. I have different ways of looking at the chart. One of those ways is a term that I like to introduce to you, which is called intermarket analysis, okay? Intermarket analysis is like you're dating a sister and you're trying to understand that sister's habits based off from her sister. You're trying to see how big her brother's is. You're trying to see how beautiful her mama is. You're trying to see which environment she grew up in. That's the best I can explain this, guys. Intermarket analysis is trying to create an overall view of the pair you're trading by looking at its correlating pairs. Now remember this, correlation does not always mean causation. So what does that mean, MC? That means that I'm going to give you the pairs that correlate, some of them right now, but that means if I see a correlation setting up right now, that does not mean I can instantly take a trade. Obviously, it boosts your edge by 10%, sometimes even 20%, depends on the correlation you're looking at. It all depends on what bias do you have, okay? So I always like to talk about a baseline. That's my confluencing factor. So I love to see, let's see, for example, I trade Euro USD and GBP USD because they correlate. If I see a correlation matrix on both of these pairs happening right now during NY session and I see a green setup day for buys, it's going to be super easy for me to dictate when those buys are happening. Because remember what we spoke about yesterday, we're looking at the price. But looking at correlation, I don't want you to look at correlations or intermarket analysis and think that's going to give you a level. That's how you're doing it wrong. You're looking at a level. And that brings me to another discussion. A lot of you know so much, but you don't know how to apply it. So intermarket analysis and correlation is not for levels. That's the biggest mistake you can make. It's used for timing. So if I can see there's a 10-minute gap between Euro USD and GBP USD and they are in correlation, the correlation coefficient is, let's say, 0.78, which is pretty damn high, then I know if I see a bearish engulfing off from the baseline on GBP USD and Euro USD is rejecting off from a baseline or Asia session high, let's talk about Asia session high. Of course, let's say Euro USD broke above, but GBP USD respected the Asia session high, then both of them are going to follow suit. You can short the one with, I don't know, the smallest spread. You can short the one that you like the most. Okay, this has to be in context though. Structure has to align, setup there has to align, your confluence has to align. I'm talking today about updating your edge, okay? You've got a 50% chance regardless, okay? You can flip a coin, it's going to be 50%. But your odds decrease by not knowing when to exit, not knowing how to handle your emotions, not knowing how to manage your risk. And the truth is, folks, I can give you my trading strategy on a silver platter. I can say, hey, here it is, have a look. But 9 out of 10 of you won't know what to do with it because you don't understand how I'm thinking, you don't understand how I'm doing it, you don't understand some of these things. That's why it's so funny. When people ask me my strategy, I'm like, no, no. I can give it to you, but you need to understand how I think. You need to sit with me and see why I do what I do. It's discretion, but it's not always discretion. I love to sit with you and hold your hand during every single trading day. I mean, that would mean the world to me, but I can't, okay? I'm only one person. At the end of the day, you need to understand the method to my madness and understand why we're doing certain things. So I'm here to update your edge. Intermarket analysis is a tool that you can really use that can, if you're ever confused, let's say you got your bias, you got your trend, you got the daily levels, and you see a trade lining up and you're like, damn MC, what do I do? And I'm going to be that little voice in the back of your head saying, look at intermarket analysis, okay? That's what you need to do. Because intermarket analysis, like I said, gives you the edge, but it doesn't not only do that, it helps you with identifying your stops levels as well. Because let's say GBP USD is at the top, but Euro USD is already further from the entry. But you really want to take a trade on Euro USD. You know that you can place your stop just with the pip count from GBP USD on the same as Euro USD. Now, it doesn't always look like that because Euro USD and GBP USD have different spreads and the commissions are different. But just make sure you take that into consideration. It won't always work like with US 30 and its top performing stocks. Won't always work like that. So there's a bunch of different tricks I can teach you guys. You just need to ask what and I can show you to. I've got this brain is so packed with trading knowledge and trading tips. I love to share everything with you. So my top intermarket analysis pairs that I look at is gold and then my composite index of gold. I look at my DXY as well. So that's the bracket of those three that I look at. I hope you guys are taking notes. Rewind this, pause this, go grab a cup of tea, do your work. You know what to do, but don't sit here and just look at my beautiful face. Come on, guys, take some notes. So I look at those three, and then after that, I look at Euro USD, GBP USD, and then a DXY. Okay, I look at those three as well. So it's not always going to be three. Here's a cool trick. A lot of people think that they can look at interest rates and the DXY when they're trading US 30 or NAS 100. So if you're trading indices, this is for you. I'm going to show you on the chart in the next sessions how it works. But the way US 30 is calculated is different. It's a weighted index. The weighted index is calculated different than NASDAQ. You cannot trade the two the same. You cannot. If you think you can, you're making a mistake. Now, I know interest rates affects it. I know what's going on in the fundamentals affects it. I have massive respect for fundamentals. It works, but you cannot impulsively trade off from fundamentals. You need to use intermarket analysis after the fundamental release. That's at least that's what I do. So when you want to take a trade on US 30, what's the number one thing you do? I'm going to pause this video and really think about this because a lot of people don't know about this. I'm going to take you way back. When an index is calculated, it's calculated by the composite stocks. So that means basically that the top stock and the second top stock, the third stock, they calculate up to more weight than the stock at the 30th. So it's out of 30 companies, more or less. So the last company will not carry as much weight as the first one. Here's a cool trick. The top 7 companies in US 30 carries at least a little bit more than 50% of the movement of US 30. How easy is that? You just look at the top 7 companies when NYSE opens. Look at the gap down, gap up. Did they gain strength, lose strength? You look at the baseline. I always look at a baseline. I cannot trade without a baseline. I look at the baseline and see if my market is overvalued or if it's undervalued. If 5 out of 7 is overvalued, what's going to happen to US 30? US 30 is going to rise. If 6 out of 7 is undervalued, what's going to happen? It's going to fall. So what I want you to do with today's homework, I need you on your trading view, open a separate playlist because this is where I want to walk the walk. I don't only want to talk the talk. Go and look at, I'll put the link in the description. It's called Index ARB, but look on Index ARB and see the top 10. Let's say the top 10 companies of US 30. Put it on your trading view, and then after that I need you to check the movement of them for the past 2 weeks, and then you'll pretty soon come to your conclusion. That's how easy it is, folks. I can say this to you off the back of my mind on this camera. Now let's talk about NASDAQ, okay? NASDAQ is not the same. NASDAQ is not calculated per company. NASDAQ takes the basket of all 100, a little bit more, sometimes a little bit less. And by the way, you got to watch out for earnings too, okay? I'll put a link in the description where you can keep track of your earnings. That's super important. But anyway, you got to keep track of the basket. If majority of them, you can look on nasdaq.com. If majority of them are bullish, it's like a heat map. NASDAQ's going to rise. If majority of them are bearish, NASDAQ's going to fall. It's exactly the opposite as with US 30. If I see the top 7 companies is bullish on US 30, but the rest is bearish, where's it going to go? It's going to go bullish, bro, because that consists of 50% of the volume of US 30. There's a bunch of tips and tricks with gold. If you're trading gold, go ahead and Google Plaza Accord. Go ahead, I'll put that in the description as well. Go and look at Plaza Accord. So Plaza Accord is basically an event that happened back in a day where you can look at gold and USD JPY for the correlation. So draw up your 1 minute time frame. Don't trade like this, please. Just go and look for interest sake. If you're bored, go and look at this. Draw up your 1 minute or 3 minute time frame on TradingView. Draw up gold on the left, USD JPY on the right, or even better, the futures pair of JPY. And then look at the leading and lagging. That's a key term. You'll see one leads, one lags during NY session or Asia session, not London session. One leads, one lags. Here's a very easy strategy for you. Try and find the bottom of Asia session, the high of Asia session. You can trade USD JPY. If USD JPY already turned around, what's going to happen to gold? Gold's going to turn around as well. Same with NY session. If gold turned around at the bottom, USD JPY did not during NY session, you can buy USD JPY. That's super easy, super simple. Remember though, has to be in context, but this adds to confluence to what you're already seeing. So folks, I definitely can sit here until tomorrow. I've got so much knowledge to share with you. Unfortunately, I can't. I like to keep these videos short and sweet. If at the end of this video you're a bit confused, don't worry. Okay, you can reach out to me via email, But always remember to understand why I'm saying these things. I'm saying this to help you, okay? I've just literally explained the pairs that I'm trading, but there's so many out there. So many tips, so many tricks. But I need you guys to start with this first. Focus this first. Replay what I said. Nothing changes. Don't come and say, hey MC, does GBP USD correlate with gold? Then I would have said it correlates with gold, okay? USD JP was one that best correlates with gold, apart from my composite index and DXY. If you want to look at the lead lag, look at gold. Don't come to me and ask, hey MC, what about the last 7 companies of US 30? I did not talk about that, so it's not relevant. Don't go and make extra work for yourself. Focus on what I talked about and really just refine it, okay? That's super important. Intermarket analysis is super important. If you do it right, you're going to add like 10% to your edge. The other 10% comes with emotional management, and then the rest comes with risk management. Because if your risk management is fine, then your emotional management is going to be fine. I love to help you guys, man. I'm super stoked for tomorrow. Well, even better, I'm super stoked for the next couple of videos that's releasing next week, because we're really going to jump into the charts, discuss the technical analysis, and how we break everything down. Hope you guys are blessed. Do a good thing today. Flip the switch, unleash that madness.